Halfway into 2022, investors continue to be on the edge as the outlook for the remaining months stays unclear. While analysts say that most of the damage has been done with little room for further downside, key factors like interest rates, inflation, and corporate earnings could guide the markets over the next 6 months.
So investors should be looking at how growth and inflation environment is developing globally. Right now it is still volatile and things are not clear. And in domestic markets, these data are also key points, and these are key points for central banks for setting monetary policy decisions. Another factor is the interest rate path, which is also important for the market. So to sum it up, I think growth, inflation, and interest rate glide path, which the central banks would be taking in coming policy meets, will be the key data points to watch out for. The impact of higher raw material prices, commodity prices, and other challenges in terms of logistical challenges, supply chain issues have definitely impacted corporate earnings. And not only in coming quarter, but in previous quarter also we have seen that this impact has been there for companies. We see this to continue in current quarter as well, with some pass-through happening because in last quarter some of the companies have mentioned that they have initiated pass-throughs, and so some improvement could be seen in some pockets. Having said that, top-line growth has been encouraging currently, and the momentum should also continue in next quarter, which gives comfort that the demand is intact, and once things normalize on cost aspect, earnings could revert back to normal margins.
Growing fears of recession have dealt a blow to US equities, the ripple effects of which have been felt by emerging markets, including India. The MSCI Emerging Market Index has dropped around 17% this year, which is its worst fall since 1998, according to Bloomberg. Besides, US Fed Chair Jerome Powell has admitted that the Fed's expeditious move to raise rates could bring an economic slowdown. According to Morgan Stanley, though a developed market recession would undoubtedly weigh on Asia's growth outlook, the downturn could be relatively shallow for Asia. Back home, the trend of foreign investors that continue to be on a withdrawal spree from Indian equities will be another important trigger, though analysts do not expect FIIs to remain bearish on India for too long.
FIIs have been net sellers to the tune of nearly 2.8 lakh crores this year itself. Now, this has been largely due to rising interest rates and valuation discomfort, which was there at least at the start of the year. And moreover, continuous strengthening in dollar has also impacted sentiments for the FIIs. Now, going forward, we believe as soon as we see inflation concerns abating and interest rates turning stable, we should see FII flows coming back into the emerging markets, and especially India as well. And India has been, a proper long-term growth story. So we do not believe that FIIs would remain net sellers for a very long period of time.
The markets may continue to exhibit volatility today on somber sentiment ahead of the weekend. Besides, investors will closely monitor the manufacturing PMI for June and the preliminary trade data.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
तुम इतना डर गए?
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.